Robo-Advisors have revolutionized the world of investing by providing a user-friendly, automated way for individuals to invest their money and grow wealth passively. So whether you're new to investing or not, Robo-Advisors are an easy and convenient way to have your money invested for you. And in this video, I'm going to explain to you what exactly Robo-Advisors are, how they work, some of the best ones for you, and how you can get started. And then I'll end the video with my final thoughts on the entire thing. So before we get started, if you do appreciate the work that has gone into creating this content, it'd mean a lot to me if you hit the like button on this video and subscribe to the channel. Alright, so with that being said, let's start off with your first question, that is, what are robo-advisors? Now, robo-advisors are automated online platforms that provide you with investment advice and portfolio management services. Robo-advisors use different types of algorithms and programs to create and manage an investment portfolio for individual investors like you and I automatically. So the entire purpose is that robo-advisors are designed to make investing easier, more efficient, and cost-effective compared to a human advisor. But how exactly do they work? Robo-advisors work through a series of steps, with the first one being the risk assessment. When you sign up with a robo-advisor, you'll typically be asked to complete a questionnaire that assesses your financial goals, risk tolerance, and investment horizon. This brings crucial information to the software that allows it to build a suitable portfolio for you. And because of that, that's going to lead into the next step, that is asset allocation. This is where the robo-advisor uses the data that you input to determine the optimal allocation for your portfolio. The process for this involves selecting a mixture of stocks, bonds, and other assets that best fit your risk profile. And then from there, the number 3 step is portfolio construction, where the robo-advisor is going to actually build the portfolio for you. So once you create an account, it's going to construct a diversified portfolio of ETFs or mutual funds that best align with the criteria you input. For those curious, you're generally not going to see any individual stocks that come out of robo-advisors because they're mostly index funds that are meant for long-term investments. Alright, so now that you have a portfolio, the neat thing about robo-advisors is the number 4 step, and that is the automated rebalancing. So the neat thing is that robo-advisors continuously monitor your portfolio, and if anything drifts away from its original target allocation, it will automatically rebalance it to ensure that your investments stay in line with your risk preferences. The number 5 thing to know about robo-advisors is their tax optimization, because many of them offer tax-efficient investing strategies to help you reduce the amount of capital gains taxes that you have to pay. I'll go into more detail on that later in the video, but there are many articles like this that show some of the best robo-advisors for tax loss harvesting. And for those curious, tax loss harvesting is a simple and legal tax strategy that you can do to reduce your capital gains by selling off your losses. Simply put, say it's December and you have already sold investments and captured $10,000 in capital gains. If you had other investments that were down, say a total of $10,000, and then you sold them, that would offset your entire capital gains, and if done during the same tax calendar year, then you would have no capital gains to pay taxes on. Now, the last thing I want to mention about robo-advisors is their low fees. Their fees are generally much lower than traditional financial advisors, and for most platforms, you're typically going to see at most 0.25 to 0.5% of an annual fee, but there are even free options like the one on SoFi. Now, if you are interested to use SoFi and you do sign up using the link I have in the description below, you can get $25 worth of stock if you deposit at least $10 or more. Which, this is an affiliate link, so if you decide to do that, that also helps me out as well. But if not, let's move on and talk about the pros and cons to robo-advisors. Let's change it up and get the bad parts out of the way first. So the cons with robo-advisors are, first off, limited portfolios. This basically means because robo-advisors are programmed to create pre-select portfolios, there's only a limited amount of portfolios that can be selected for you, and there's not an in-depth amount of options. The next one is the lack of human interaction, and this may seem like an obvious one, but it is a very serious one, because there may be someone that needs to talk to a real person to solve an issue, and that can be very difficult to actually do. Something that this reminds me of that annoys me is calling customer services that are very difficult to actually get a hold of a real person, and it ends up taking 15 minutes alone just to get talking to somebody. Then the third con with robo-advisors are the limited investment options. This piggybacks off of the limited portfolios, because with a robo-advisor, there are limited options when it comes to what types of investments you are into. So if you want a highly customized portfolio, you are going to want to create your own. And then the fourth con to robo-advisors is the cost. Although it is pretty cheap, if you are doing this for a long time, it can add up, and that is much more costly than just doing it yourself, and it is not too difficult, especially if you watch all of the content I've created on YouTube, which it's free. In fact, I even mentioned in this video a real-world portfolio using only index funds that achieved over a 13% average annual return over a 10-year period. I'll have that video linked in the description below. That is using Vanguard ETFs, which any platform can pretty much do. Alright, so now that you know the downsides to robo-advisors, let's talk about the pros. The first one is accessibility, and that is because robo-advisors make investing extremely easy to do. It takes only a couple steps to get started, and it runs itself thereafter, and most of them have no minimum down requirements, so this is something that most people could do. And the second thing is that they are cost effective. I say this because from all of my research I've done, most of them range from 0.2 to 0.35%, which is extremely low, especially compared to a traditional financial advisor. And the third thing is diversification, which robo-advisors offer well-diversified portfolios that do not include individual stocks, but many funds that track many different markets. Then the fourth pro is automation, which robo-advisors automate the entire investment process, which is going to even run the account itself, and that's going to save you time and energy. And the last pro, number 5, is professional guidance, and although they do not have the human interaction of a traditional financial advisor, they still provide a lot of guidance for you based off their algorithms and data insights for you. Alright, so that about covers the pros and cons to using a robo-advisor. Let's now go over the factors to consider before making a decision. The first thing you need to look at are the fees, and specific ones include advisory fees, account minimums, whether or not you can even start the account, underlying expense ratios that aren't shown on the advisory fees, and any additional costs that may vary based on each platform that you should always look into before making a final decision. I mention that because on a platform like Fidelity Go, there are no advisory fees initially, but once you have a balance over $25,000, it then becomes 0.35% annually. And I know that may be around the industry average, but if you did that for over 30 years, and let's say in a Roth IRA contributing $6,500 every year, then at the end of those 30 years, it would be a difference of $68,000. That's right, $68,000 of tax-free cash if you were to invest yourself using regular index funds instead of using a robo-advisor. Over that period of time, it over time adds up because of the power of compound interest. The next thing to consider are the features of the platform, so do your own research before you decide on anything because some may be better than others for tax optimization, automatic rebalancing, or even the display to show you everything clearly. The fourth factor would be customer service, to consider the level of support and whether or not you can get the help if needed. For example, I have a Roth IRA with Fidelity, and I know if I have any issues, I can call in and they will always be efficient and help me out with any issues I have. I'm honestly just mentioning that because many of them are only chat with an agent or send them an email, and it usually takes a lot longer of time. The last thing I want you to consider, which I'll mention more on later in the video, but that is to research the performance from the options you decide on. I say that because if you narrow it down to only a couple of platforms, although it's not guaranteed to do anything for the future, if you look at the previous returns that their robo-advisors have gotten and you compare them, there may be one that is way better than the others. So that being said, let's now go over the best ones to use. The first company, Wealthfront, has over 600,000 clients, and to use their robo-advisor, you can get the first $5,000 managed for free, but the typical advisor fee that you're going to see after that is 0.25% annually. You can see the process to using a robo-advisor is super easy, and all you have to do is sign up, make a deposit, and the automations will do the rest itself. On top of that, Wealthfront also provides you the ability to still customize your portfolio and be notified if your choices aren't in line with your initial risk levels that you input. The next one is Betterment, where they can build portfolios with tax-efficient investing strategies and ongoing optimization that are very similar to the other platforms I'm going to show you. The difference here with the pricing strategy is that with Betterment, you can actually choose a $4 per month or a 0.25% annual fee to use their automated investing features, and that pretty much comes down to being if you have invested over $25,000, you should just do the $4 a month option because that would actually be cheaper. I say that because if you did 0.25% of $25,000, that's $62.50 after a full year, which is just over $5 a month, so why not do the $4 a month if you have a lot of money invested? Besides that, there is a zero minimum balance requirement. You can have multiple portfolios, automate rebalancing, and even both types of IRAs. Alright, so moving on to the third one is Vanguard, and they combine the benefits of a robo-advisor with the access to human advisors. And as I said, something like Vanguard and Fidelity, their ongoing support is much better than other types of platforms, that's in my opinion, but they also have low cost investing, and you can potentially get tax savings as well. The downside with Vanguard is they have a minimum balance amount that is needed of $3,000 to get started, and as far as their fees, they have at most a 0.2% a year in fees. The next option is SoFi Invest, which is another solid option where they do investment planning, diversification, auto rebalancing, and recurring deposits, all with as little as $1 to get started, and includes management fees of 0.25% annually. The next one is the Schwab Intelligent Portfolios, which is with Charles Schwab, and you can get the Robo-Advisor with as much as $5,000 to get started. That has no management fees, but they do let you know that for all types, you have to consider the underlying expense ratio from the investments that they pick. They even let you know that they use their own Schwab ETFs so that they can make some money from that. And then the last one I'm going to mention for you is Fidelity Go. That is the Fidelity's Robo-Advisor I mentioned earlier that has no advisory fees under $25,000, but then is 0.35% once your account hits that balance or above. There's no minimum amount to open up this account, and you can see that once you reach $25,000, they provide you with access to a personalized planning and advice coaching team, unlimited 30-minute one-on-one calls, and the ability to have conversations about financial literacy with a professional. Alright, so now that you have an idea for some of the best platforms, here is a look from Condor Capital Wealth Management that shows how a moderate 60 stock, 40 bond portfolio had performed for each company's robo-advisors over a 5-year period that ended at the end of 2022. Just to highlight for you some of the ones I mentioned, you can see Betterment at 3.25%, Charles Schwab at 3.15%, Fidelity Go at 4.5%, SoFi at 4.1%, Vanguard at 4.06%, and Wealthfront at 5.1%. Don't forget that this is a moderate approach to have 60 stocks, 40 bonds, so if you're someone on the more risky side that goes more aggressive, then these numbers are definitely going to change and they would be higher, and then vice versa if you do the opposite. Alright, so now that you have a better understanding for real examples, let's now go over how to get started. To get started, you first need to pick the platform you want to use, and for this example, I'm going to use Fidelity. Alright, so if you're starting from scratch, you're going to want to search on Google the Robo-Advisor, or because I know the name, it's Fidelity Go. Click on the link and you're going to see the entire page that brings you details on their Robo-Advisor. From there, click Get Started in the orange. You're going to start getting asked questions, and the first one is why you're investing. I'm just going to say retirement. By the way, the fact that I'm using Fidelity does not matter because robo-advisors are going to be asking relatively the same questions for each platform. But back to it, since I said retirement, they show that the types of retirement accounts you can start with, and I'll just say Roth IRA because everyone should have one, which if you don't, you can check out my Roth IRA videos that I'll have linked in the description below of this video. But once you decide the account, hit select, fill in more data like your birth year and annual income, the amount you believe you will be depositing, and then after that, you can see the risk type you can select and view the different outcomes on the portfolio, such as the amount for domestic stock, foreign stock, bonds, and short-term cash. You can then see your ideal retirement age and use the other criteria you input to see a potential growth chart for your portfolio if you continue to invest consistently with this. You can see right here that they do use a 0.35% advisory fee included in the chart, and then after viewing all that, if you scroll down, you can see more details about the account, and if everything looks good, click Create Account to finish the final touches. So that pretty much wraps it up, and after that, your account is going to run itself. Now I do want to mention, if you're still watching this video and have not subscribed to the channel yet, definitely consider doing that and putting on notifications to be alert for future videos that I'm going to be posting. But if you are wondering what my entire take is on this whole robo-advisor thing, here you go. Now, because robo-advisors are solving a problem that allow many investors to now invest easily and have their accounts run for them without having actual financial literacy, the market for robo-advisors, in my opinion, has a lot of growth ahead. It's amazing because of how much technology is growing that even people that know about investments and have been doing this for a while are also trying out this approach of using a robo-advisor. But just because it sounds so easy and comes with low fees that can potentially get you really good returns, it doesn't mean that you have to use it. Personally, I love knowing what I own and having full control over my investments. It's also just a personal preference because I like investing majority in the S&P 500, where if you have a robo-advisor, it might not do that, but you might believe that the robo-advisor is going to get you the same results. So I honestly think it comes down to personal preference, because if you do want to learn to invest, if you just spend that time, and there's free content all over YouTube, including my own channel, that can pretty much teach you everything you need to know, you can learn how to do it yourself. And because that is a pretty interesting topic, at least to myself, I'm going to give you a quick breakdown on the differences between using a robo-advisor and managing your own investments. If you use a robo-advisor, you will need limited investing knowledge, you will get the convenience of needing nearly no involvement in the portfolio, it comes with low advisory fees, but the investments that are picked, you may not understand the underlying fees that come from each investment, and over time that could impact your portfolio as well. Besides that, robo-advisors alone do not have a ton of historical data compared to something like the S&P 500 that everyone uses to compare. Then, by managing your own portfolio, you have full control over your decisions. You're more likely to learn and understand the financial markets. Because of that, you can do this with no advisory fees, and you'll understand any underlying fees that are eating away your portfolio. And lastly, you can take responsibility for any failures, and failures lead to success if you learn from them and keep moving forward. Now, if that made you think about the difference between a robo-advisor and a traditional financial advisor, I wouldn't even think about that because they both provide different services. To sum it up, a robo-advisor helps you build and manage an investment portfolio, while a financial advisor does that as well. Their role is much more than that because they provide the financial guidance to their clients on topics like savings and retirement planning to ensure they're always in good shape financially. Think of it as someone who advises you on all your finances rather than just investing your money. And if that's all you're looking for, then a robo-advisor would be the pick for you. Now, if you're interested to see other relevant content I've created, I'll leave links in the description below this video to get directly to them, which while you're looking at that, don't forget to check out my free guides and templates that I've created and my free weekly newsletter that I write once a week to help those out there improve their financial literacy. And as always, if you found value in this content, don't forget to hit the like, subscribe, and notifications button for future Money Talk content like this. Thank you.